We are back. I'm your host, Barry Waxler, here with Andrea Kay and Urban Miaris. I took your acronyms off there this time.
All right.
So, and we've asked Miss Eve Nasby to sit in with us one more time, and we have an exciting guest on today. So I'm going to get right to that instead of digging into some other stuff, and welcome Mr. Sri Kaza from the Tax Credit Company. Welcome.
Thanks for having me on.
Great. So tell us a little bit about the Tax Credit Company. Tell me what you do and how you do it.
Tax Credit Co. helps businesses, both small and large, capture tax credits and incentives offered by both the federal government and state governments. So one of the things that we do is we take a lot of the complication out of dealing with the government on these programs and make it a lot easier for these businesses to capture the credits and incentives.
Okay. So tell us, give me a few ideas of what type of tax credits, because my understanding, and maybe we should go about it this way, my understanding is that most small businesses, there are a lot of small businesses that are eligible for tax credits, and of those that are eligible, very few even understand they're eligible, and even less take advantage of it.
Yeah, that's right. The government wants to incentivize investment in the community. So both in terms of investing in people by hiring, or investing in assets like building buildings or warehouses, or even investing in people by training them. And in their good nature, they try to build a program that's going to qualify a lot of the activities that businesses do, but they're often very complicated and not very well known. So a lot of the smaller businesses that engage in the same activities that the large businesses do don't take advantage because it's too complicated.
So let's talk about the large businesses out there, because that's not our focus on the show, but it's something that we have to deal with. The large companies out there are getting all the tax credits. A lot of the companies that you serve, Eve, they're getting a lot of tax credits because they have a large staff of people that probably do nothing but seek out and find those credits for their company. Is that correct?
Yeah. People have heard about the corporate tax rate in the U.S. The marginal corporate tax rate is very high, but the effective tax rate for most of these large corporations is actually a lot lower. And the reason is because these large corporations can afford a department that's focused on capturing every one of the credits. In the end, we actually work for those departments and help them, because what we've done is we've specialized in finding the most out of these credits. But if you don't know about the credits, or if you don't have somebody in your organization whose job it is to go and make sure you've got every single one of those things, you're not getting them.
Okay. Well, one of the things that I see periodically is some of the payroll companies out there will find different ways to apply credits, but it's an incomplete process, is it not?
Yeah, it's difficult. So some of these credits, especially the hiring credits, require that you get a certification before you actually give the person an offer. One of the most popular programs that we work on is called the Work Opportunity Tax Credit. It's available to companies that hire veterans or hire anybody who's off of some kind of government subsistence program, like food stamps. So in each of these situations, payroll company, it's too late because you've already hired the person, you've set them up. You can't go and apply to the government for a certificate to qualify the individual's credit. There's other programs, for example, that the payroll company couldn't help with. For example, the R&D credit, where you need to do a lot more work to prove that what your activities are spent on are truly R&D.
Interesting.
What would be an example of some of the R&D?
Well, classic R&D, if you're developing a new product, you can picture guys in white lab coats, designing and developing something brand new. But really, it applies to most businesses developing anything new. So a new product, I was talking earlier to Eve about an example where a small business was developing a new salad dressing for their menu. Now, developing just a new salad dressing and getting people to taste it and picking the best tasting salad dressing, that doesn't count as R&D, as you're developing a brand new product. But if you were focused on getting a lower
calorie... If it
calorie...
did, I think I'd go into the salad dressing business.
Well, if it does something in the hard sciences, you've got a chance of qualifying it. So if you're looking at, can I get a lower calorie product, right, by changing the formulation, and you do some sort of testing to determine that, yes, I'm meeting certain benchmarks that are quantifiable benchmarks, it does qualify. And then going to the effort of documenting those things, documenting all the costs, it's not something most accountants are spending a lot of time doing. They've got enough on their plates at tax time. So this is where we step in and can help out.
Well, that's interesting. I mean, I knew that the accountants, are so focused on doing what they do, which is basically the historical work. They take what's happened and they drop it in, and they try to do a little bit of planning and end up with a better tax rate, hopefully. But accountants don't focus on going after the credits for people. That's a specialty all its own, is it not?
Yeah, you don't get training on this when you're getting your accountant's degree. I think a big piece of it is navigating government bureaucracy. With one of the programs I mentioned earlier, the Work Opportunity Tax Credit, we have 4 different government agencies that we've got to go deal with in order to just get the certification to be able to claim the credit. We've got to deal with the State Department of Labor. We've got to deal with the VA. We've got to deal with the IRS. We've got to deal with the Food Stamps Administration. There's a number of different entities you've got to deal with just to make sure that you get a credit, which in the end, if you're only doing 1 or 2, ends up not being worth the time.
Right.
One of the things that small business, especially the micro and your small business, your chart of accounts is generally simplified so that you take the salary dressing, you got cost of goods, and then the sale. But in that cost of goods, including labor, could be tax credits. Mm-hmm. In the salad dressing as an example, and that's why the accountant only knows cost of goods. That's all that they're given. So you small business owners out there, really get into your chart of accounts, find out what your behaviors are, and get with your accountant or someone that knows about tax credits.
Mm-hmm. Get with 3. What are some other non-food?
Oh, there's a number of different programs that'll work. R&D is for any kind of new product, but states like California offer other incentives like the California Employment Training Panel, and in this example, a company who's training their employees, investing time and money into developing skills that their employees could use in their company or elsewhere. California wants to create an incentive for that. So companies that are spending that effort can go and apply to the state and ask for an award to help pay for a big portion of what they're spending. In fact, match almost all of their cash cost in terms of training.
Yeah, Eve, this looks like something that would be very attractive to a lot of the companies you deal with, because I know we talk a lot about veterans and placing veterans with employers, but you deal with the other side of the fence. You have to deal with the employers all the time. How many employers are really getting into this type of stuff, or is it a lost art?
Getting into hiring veterans?
No, not hiring veterans. Getting the tax credits for hiring veterans.
In fact, I'm on a committee, we were just talking about this in the green room, on a committee with the San Diego Chamber of Commerce, and the tax credit is a little-known commodity. There's a lot of misinformation out there, and they don't know where to find good information and updated current information. So there's state legislation that was passed a few years ago that's no longer in action, and people think it's still there. They still think they can get the tax credits, and they can't. So the WOTC tax credit that he was just talking about is still active. So you actually need somebody like him who's up to date on all these things to make those effective choices.
Well, it's interesting, and Sri, I'll go to a different point that would, if I'm a listener and I'm hearing this conversation, the first thing that strikes me is, okay, we're in business for ourselves. We had to pay to set up a corporation, to do whatever we do. We then had to go hire an accountant to do our taxes, and we're going to spend $500 an hour for that accountant. We had to hire an attorney to write all our documents and do all the different stuff, and that's going to be another $500 an hour, whatever it is. And then we come out. Now we have a whole new specialty of coming in and finding the credits that we're due, and that sounds expensive too. But if I understand correctly, you work on a different basis, do you not?
Yeah, for the most part, we can charge instead of a flat fee or for our time and materials, we'll charge based on our success rate. So if we're able to, because a lot of these things are hard to do, and they take some persistence in working with the government and making sure all of the documents are filed on time. We'll take that on ourselves, and then in the end, we'll take a percentage of whatever's been delivered.
So that's like an attorney doing something on contingency, basically.
Yeah.
Oh, I love that.
Fantastic.
They don't get paid unless they get the job done.
I love that.
So.
I've said this before. How many business owners actually know how many, as an example, veterans are in their employment base? Many companies in San Diego don't even tabulate that.
Right. And, we talk a lot about veterans. Well, we also have a lot of women-owned businesses. There's some special credits that go on for women-owned businesses, too, are there not?
Yeah, there are. Now, they're going to be jurisdictional based, so I don't know that San Diego has one in particular, but there are some in other communities that do. Usually when we meet with a business owner for the first time to talk about tax credits, we'll do a full scan, right? We'll look at where you're located, what types of businesses or activities are you engaged in, do you have upcoming investments that we could actually go and ask for support from the state. I know that here we're talking a lot about the tax credits to support a new stadium, right? Mm-hmm. But the reality is, governments want new investment anywhere that's going to create jobs. So if you're planning on any kind of investment or growth, there's a good reason to raise your hand and say, hey, I'd like some support either from tax increment financing or some other type of credit program to help that investment.
Right. And sometimes if being in the financial services arena, I've seen a lot of this over the years. Not a lot of people do it well. So my hat's off to you for that. That's why I asked you to come on, because I know what you do. But it's also sometimes it's a function of changing the behavior of the company. They may be doing everything that qualifies, but they may not be doing it in a fashion that qualifies. And if you can change that behavior just slightly, you can generate the credits for them. Is that correct?
Yeah. Just the salad dressing example, to go back to that, is company's intention is to create a good low calorie salad dressing, but if they're not doing the measurements or they're not documenting, then they're not going to get the credit. But if we go in and we spend some time with them saying, here are the 10 projects you had in terms of introducing new products, here's what you could have done or could do going forward that's going to help you qualify these. And that can be pretty valuable to a business.
Yeah.
I can tell you, sophisticated investors love business plans that show tax credits. It shows that you really understand your industry and your business, and you should include it. So if you're thinking about starting a business and in your business plan or expanding your business and redeveloping or strategizing your business, include a section on tax credits. 99% of you do qualify in some way, depending on the behavior of your business.
Interesting. You're listening to Close Up on San Diego Business here on KCBQ, streaming live at AM1170theanswer.com. Give us a tweet at CloseUpSD. Email me at barry@closeupsandiego.com or find our page on Facebook. We want to hear from you. I'm your host, Barry Waxler, here with Andrea Kay, Urban Miaris, Eve Nasby, and Sri Kaza from the Tax Credit Company. So, it's interesting, some of the things Urban just mentioned. It seems like not only can you get tax credits, but if you're qualified for that, that's got to add value to your business in the event you're in the mode to sell your business or just quantify what the value is.
Yeah, that's right. A number of the clients that we work with may not even have the tax liabilities today to benefit from the tax credits. But what they'll do is they'll book it. They'll put it on their income statement, and then they can, when they package the company and sell it, the next acquirer would definitely benefit. Right? A lot of times a profitable company that acquires an unprofitable company will pay more because they have the tax credits that they can be used.
Yeah, interesting. Now, I'm going to take it in a little different direction, be it popular or unpopular. I'm going to ask you, what can a business owner, and I know this is a very nebulous question, but what can a business owner expect? I mean, if we're talking about getting tax credits, are we talking about $100, $500, or are we talking about some big numbers that really impact the bottom line?
No, it depends on the size of the business and the type of activity, but take a small restaurant that hires 5-10 people every year just to kind of replenish the wait staff and busboys that are coming in and out. It could be more than that, 20 people a year. 4 or 5 of those people that they're hiring will probably qualify for the WOTC program, and each one of those people, depending on how long they stay, could be worth $1,200 to $1,500 in a tax credit. So we're talking $6,000-$7,000 of tax credits just for a small restaurant. For a small restaurant.
And for our listeners, so they don't get confused on this, difference between a tax credit and a tax deduction is, a tax deduction reduces your income, which applies to the tax due. A tax credit is cash you can use to pay any taxes due, and you can carry that forward and carry it backward, too, if you need.
Yes, some of them, like the work opportunity tax credit, you can carry forward 20 years, carry back 1 year. And the R&D credits, depending on the state or the federal jurisdiction, you can carry those forward as well for a really long time.
Right? Oh, I love that. Cash, baby.
Hey, listen, you know what? If I have my choice, Uncle Sam's paying my expenses, okay?
Heck yeah.
So.
Well, the thing that's tough is all the other businesses are already doing it. So how do you stay competitive? Is you kind of have to when your competitors and the big businesses down the street are getting the benefits from Uncle Sam already.
Well, you know what's interesting, before we run out of time here, one thing I'll ask you to do for me is, as we talked about, veterans and getting lists of things so that we can help with the veterans on, maybe we can get some lists from you, some different materials that we can pass out to our listeners that tell us, what qualifies for tax credits, how that can help them, give them information. I know we can give us your website real quick.
Our website's taxcreditco.com, all one word, without the company, so just taxcreditco.com.
Taxcreditco.com. And do you have a phone number, anything that people can get you at?
Sure. Phone number is 323-927-0744.
Great. So we look forward to it. One of my goals is to provide value not only to our guests, but provide value to our listeners. So I'm going to invite you to be one of our guests to come on do a dial-in and come on periodically and tell us more of your great stories.
Excellent. Thank you very much.
Great. Well, we want to thank Sri Kaza for being with us. And this is Close Up on San Diego Business here on KCBQ, streaming live at AM1170theanswer.com. Send us a tweet at CloseUpSD or just find our page on Facebook. You can always email me at barry@closeupsandiego.com. Let me know what you think. I'm your host, Barry Waxler, and we'll be right back. Taking care of business.